Asset allocation is one of the most important decisions investors make. Does it really help you protect your portfolio from downside and increases the chances of upside? Do you really need asset allocation? We have investment expert Sadish Prabhu with us to explain this in detail. Sadish, over to you.
Let me take you through, what happened in the recent Football World Cup. And I'm sure many of you have followed football and some of you may be following it very closely. But if you realize that when Argentina won this year, they were competing with France, and France was the winner of the previous World Cup. But did Argentina or France emerge winners all the time? Of course not. So if you see the last 6 World Cups, you'll observe that none of the teams that are displayed on your screen are the same. So you have Argentina, you have France, you have Germany, you have Spain, you have Italy, and you have Brazil. So none of the teams have been able to win the World Cup consistently. Also look at their style of playing. Like some of them have an all-round style. Some of them have a very attacking style. Some of them have a very defensive style. So it is also observed that it is not just the countries themselves, but it is also the style that is not consistent. You will not have a single style that is winning consistently. So the challenge is that you will never find consistency in life or in investments as well. So even in our personal lives, we never find that, life is very, very consistent. In fact, I will say even a day is not very consistent. Sometimes, the start of the day is good, but the end of the day may not be as good. A week may be good, a weekend may not be as good, or it could be vice versa. We have a new year beginning, but we all know that the year is not going to be the same either for all of us, but even for individually, that the year is not going to be the same throughout. We'll have our ups and downs. So let's move on to what happens in investing. So we have done this analysis for all asset classes, whether it's equity, whether it's debt, whether it's gold, or whether it's cash. So CPI is basically inflation, and we just check whether our asset classes, how have they performed year on year since 2005, which is a period of, I would say, almost 18 years for which we have done this analysis. So over the period of 18 years, again, like I showed you in for the World Cup teams, you'll realize that none of the asset classes have been consistent. Neither it is equity, nor it is gold, nor it is fixed income. But you will realize one thing, that whenever equity has done well, you'll find that gold has been relatively an underperformer. You'll find gold right at the bottom of the table. Similarly, when gold is at the top, you may find most of the times that equity is at the bottom of the table. But can we predict which asset class will do well year on year? It is very difficult to predict that. And let me give you another example. All of you are familiar with large cap stocks, mid cap stocks, small cap stocks. What we know for certainty is that at a given point of time, small caps are likely to do better than mid caps, than large caps. So large caps will give you relatively lesser returns in a good market, whereas small caps will give you relatively higher returns in a good market. But you are also aware that when the market falls, small caps will fall more than mid caps, than large caps. Obviously, the large caps will fall lesser. So in a good market, all of us want to be in a small cap. And in a bad market, all of us want to be in a large cap. But you know what is the biggest challenge? The biggest challenge is we don't know when the markets are going to go up or when they are going to go down. And I will move further and tell you that it is not just about asset classes. It is not just about large cap, mid caps, or small caps. It is also about geographies or countries put together and their performance. Here we have done an analysis of various countries, including India and the largest economy in the world, which is US, followed by China. We've done Asia, we've done US, and you can even see China there. And you'll see that this is a graph, a table from 2009 till 2022. And you realize that while India has been at the top about 5 times, US has been at the top about 7 times. And you'll also realize that like gold and equity, when US has been doing well, India is largely at the bottom. And when India is at the top, you have US largely at the bottom. But again, here too, the challenge is how do we choose whether it's a US market that is going to do well or it's an India market that is going to do well. And today, you'll realize that the US is not doing as well, but India is relatively more steadier. And that has been seen in the past few years as well. Now, like I said, the challenge is that while we know these nuances, that a large cap may not do as well as a small cap in a good market, we know that the US and the Indian market may not perform at the same momentum at the same time. And we know that equity and gold may not do well at the same time. Today, you find that gold is doing well, but equity is not doing well. So while we know all these nuances, we do not know when exactly to put more money in equities and when to put more money in gold. And believe me, nobody can predict that. Nobody can tell you exactly that, this time you put more money in equity and next time let's put more money in gold. It's very difficult to predict that, but we still have a solution. And the solution is, while it is asset allocation, it is also because, why do we need this solution and why do I say that it is difficult to predict? Because we live in a world called a VUCA world. And this is a very popular acronym that is used. A VUCA world is where you have volatility, you have uncertainty, you have complexity, and you have ambiguity. And this is true across. It is true for life, it is true for investments. And no single style, like I said, has consistently won. And we have to search for a winning combination. And the answer for that is asset allocation.
Thanks for your detailed answer. If you have any questions related to this or any other investment options or related to your financial goals, feel free to book a free appointment with our financial planner. The link to the free booking is given in the description below this video. Also, will you be interested to attend insightful investment webinars? Then feel free to register for our upcoming insightful enlightening investment webinar, and it is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give a thumbs up. Also share it in your social circle. If you have not subscribed to our YouTube channel so far, please subscribe now. Bye.